Today we will be discussing about one interesting option trading strategy. This strategy is quite powerful and is called as Fisher transform indicator. So if you want to read more details about the theory and equations, formulas of this particular strategy, a particular indicator, then you can go to this Investopedia website and look into it. There's all information given. But now let's go directly to the chart and understand how it works. Okay, so now I have already put this Fisher indicator. So you just have to select the indicators and go to your Fisher indicator here. So I just see this here, you can see Fisher transform. So this indicator now works on extremes. Extremes means, as you can see at the bottom, you see this indicator, right? So it works on extremes, and when I shift it, just a moment. Okay, when I shift it here, you can see at this point you can see the extremes, right? You can see the extremes at this point of time, right? Here you can see 2 at the top and minus 1.5. So the idea of using this indicator is that whenever our chart, okay, or whenever our graph is above this upper line, which means about 2, right, about 2, then we should wait for an indication to take a buy decision on a put call. Okay, so in this way, when it is about 2, we can say that the market can anytime move down. So how we will find it, the market will move down? We have to see here. See here, you have the red and blue lines. You can change the colors, but in this case, the red line, once it crosses the blue line from the top, okay, and the red line remains at the top, then it's an indication that the market will go down now. And similarly, now you can see the market has broken down also. If I can draw a line here, see here, the market has broken down from the top to bottom, you can see. So already there is a big breakthrough, and it will stay below this, it will stay in this situation, means it will more or less fall till this red line is above the blue line. You can see here. So till here we can sell. Okay, so this should be our entry point and this should be our end point, right? So these are the 2 points, means buying and selling decisions, when to take a buying decision, when to take a selling decision. Okay, this is for buying a put option, which means we are seeing that the market is going down. Okay, we are predicting that the market is going down. It's more bearish. Okay, now for the bullish trend, how to find it? First thing, the blue line should go above the red line. Okay, so this is one indication, but at the same time you have to see the market. See, at that point when it goes above, you can see here there is a big red candle. Okay, so it's not a green candle, right? So which means we should not take the trade, we should avoid the trade here. This is wrong indication. Now coming here, let's say at this point, okay, now the blue line crosses the red line. Okay, the blue line crosses the red line. Okay, the blue line crosses the red line, but here you can see we have an indication, we have a green line, right? We have a green line. So we will take the call here, but our stop loss should be at this bottom line. So if it comes here, we should come out of the trade. So as I say that any indicator is not 100% successful, but you should use your stop losses. Okay, you should use your stop losses. And the second entry we can make at this point, okay, of buying, right? So see, once it moves here, now it is above, and our entry point can be at this point and our release can be at this point. As I said in my last videos, we should not go for very big targets in options, because there can be any time reversal and we will be in loss if we are targeting very big amounts, right? So again we get an entry point where we get an entry point here, but this is risky because it's already on the upper side. As I said, it's in the limits, upper limit and lower limit. Upper limits are positive, lower limits are negative. It's in the negative zone. The market can go up anytime, and you should wait for indications. You should see the candles also at the same time, right? You should see the candles also. Okay, as I told you, if it comes if it moves from top to bottom, like the blue line moves above the red line, but there is a red candle formed there, okay, as in this situation, right? Here we have seen, so we should not take the trade. So this is our indication, right? We can see more historical data, right? We can now see the more historical data. Let's see, go beyond and see in the graph, right? Come here. So here what we can see, so this is a good indication here. If I go here, see, this place is a good place to do. So now the market has fell, maybe you can enter somewhere around here in this candle, okay, and see it is going on decreasing. So you can stay up to this point, okay. So up to this point you can stay. So entry and exit. So these 2 points. So as I told you, how to enter, when to exit. So this indicator is quite good, because most of the indicators, they tell you only about the entry point, but there is no indication about the exit. But here you also know the exit points also, so where you can exit it, right? So I think it's clear. Now now we can go for the call also. So here is a very good indication, because it is in the negative zone, so there can be a reversal at any time. So there is a reversal, so your entry point should be at this point. As I told you, if it crosses this big green candle, then you have to put the stop loss. So as it has not crossed, you can wait and see till it is above, you can stay. And also till the what you say, the blue line is above the red line, you can stay in the trade, okay. You can wait for little time, okay. You can wait for little time, maybe there is in between there are some red and green candles, okay. But till it is above the red line, you can wait and see your trade is successful or not, or you have to follow a stop loss. So you should keep a stop loss from just below the big what you say, big green candle, or just above the big red candle. So this is how you have to use this strategy. So I think you have understood this strategy. It's quite simple, right? If you have any doubts, you can ask in the comment section. Thank you.